All right, guys. Hey there. Good to see y'all checking in. Christopher Ranks with Texas West Capital. It is a few minutes after 12:30 p.m. Central Standard Time here on Wednesday, the 23rd of November, 2022. And man, oh man, sorry about I got hit with COVID pretty bad. Man, I couldn't believe how bad that hit me just about 2 weeks ago. And slept for like the first 4 days pretty much. Since then, just been trying to feel better here, and then I lost my voice at the beginning of the week. And so now I'm back trying to. So hopefully I won't go any kind of coughing fit. I've got some what are they called here? Cough drops. And we'll see if that works. But hopefully you guys are doing all right. Glad that you could join me here. I wanted to try and get out something here before Thanksgiving. TWC offices are going to be closed here a little bit later today through the end of, through the weekend, as we can celebrate, Thanksgiving holiday there with our friends and family. Thankfully, over COVID, just prior to that, so that was nice. But how are y'all doing? Are y'all, are you guys ready? I mean, here in the U.S., ready for Thanksgiving coming up here? We've got a lot of stuff going on. We've got the FOMC minutes that'll be released here pretty soon. Things at the moment anyway, looking not so great for the dollar, looking good for Bitcoin and stocks. We're going to listen to see what those FOMC minutes say. They looking dovish or hawkish. I put out a poll there earlier today about 4 hours ago or something like that, asking you guys what you thought. Let me see here. I've got 70.1% of y'all hawkish and 29.9% dovish. Now, of course, the market is fixing, they're pricing in a 75.8% chance of only a 50 basis point rate hike. This time coming up, and a 24.2% chance of a 75 basis point rate hike. Remember, we've already been talking about this, guys. Everybody else is like, oh, 75, 75, 75. Into next year and everything. They can't possibly stop. And then they were talking about, they're not going to do that. And then now they're like, oh, well, they're not going to pivot. And it's just people backtracking. We'll see what happens. I mean, I think, I've been talking to you guys about the idea that we would have topped out quite potentially here. I was about, a month off. Not too bad from a call earlier, at the beginning of the year. We jumped into the summer where I talked about we were going to have that 75 basis point rate hike, maybe 100, but most likely definitely a 75. And that was going to, run into the end of Q3, the beginning of Q4. And then we'd start seeing the Fed probably backing off on that. And so, again, if we can get this 50 basis point rate hike, that's kind of what the market's expecting right now. So as long as we do that, we'll be, there shouldn't be anything harsh going on. And then we'll just listen, we'll look at the language that the Fed's actually using, what the governors they were using in those FOMC minutes. And then, of course, Powell usually does his little thing. Last time, man, the language was kind of dovish in the minutes, and then Powell comes up right afterward and just sounds, a lot more hawkish. And the market did its knee-jerk reaction. I had some guy jump on me, next day, or that next day. Oh, how are y'all feeling about that? About thinking that it was already priced in and blah blah blah. And I told him, like, man, it's a knee-jerk reaction, right? And then, of course, he came back with I've been doing this 30 years and this big place and this big company and this big company, kind of just basically saying, listen, I've worked at these companies, so I know what I'm talking about. And then, of course, it was just a knee-jerk reaction, and the dollars continued to drop and whatnot since then, and he blocked me. I say that, guys, just because I keep trying to tell you guys, you can choose to be like the other idiots out there, or you can, hold yourself to a higher standard. The big thing should be, trying to discuss things and figure out what the truth is. Everybody's so dang, invested in being right online that they don't, that they're rarely ever profitable. And, I keep talking to you guys about that. Would you rather be right or would you rather be profitable? I personally would rather be profitable. I'm a human being. I'm going to make mistakes. I can't possibly know the answer to everything. I don't have some crystal ball. I'm going to be wrong at times. My goal is to figure out when I'm wrong as quick as possible so that I can be profitable, right? Shouldn't that be what everybody's doing, right? Shouldn't that be what you're doing, right? If you want to stay in this, I'm going to tell you right now, if you want to stay in this game for any bit of time, you need to take that mindset. You have to absolutely do it, guys. If you're going to continue to be more concerned about being right than being profitable, you're going to lose your money, period, end of sentence. I'm not even kidding. But as you can see, people still, and people are 50 years old acting like that. I mean, gosh, I don't even let my 11-year-old son act like that. I mean, and you got 50-year-old people acting like that. Come on, guys. Anyway, all right. Just kind of getting that off my chest a little bit there. Who's here already? We got Bamboo. What's up, man? Aramis is here. Fibaswani checking in saying happy National Fibonacci Day. November 23rd. So definitely. Data, good to see you checking in. And Silvio here as well. Let's see. Who's that in blue right there? Dr. Zoggs, what's up, man? Hey, I appreciate that. Thank you. Yeah, I'm working on it. Feeling a lot better, but, the voice thing just kind of irritating now. Sorry about that, guys. I'm going to try to keep that to a minimum. ARM, Kimosabi, good to see you guys. Frank checking in. What's up, man? Thank you, sir. Kimo wants to know, are we going to get a Black Friday deal on Bitcoin? That's a good question, huh? He says, I'm not seeing a press conference on the FX schedule after minutes release. Oh, on the FOMC thing? Is that what you're talking about? Oh, they're not going to have a problem? Maybe I missed that. What's going on, Hank? Good to see you. Mr. Wilkes as well. Name Mr. Wilkes. Let's ban the sentence. Hank says, let's ban the sentence like I have been saying all along then. All right? But yeah, nonetheless, things kind of just, if you guys have been following along, they're working out more or less how we've been talking about for the year, right? So nothing really coming into a surprise yet. Hopefully we won't be surprised, but if we do, we'd like to kind of know about that, as quickly as possible beforehand, right? Let me see here. You know what, guys? Hey, listen, you can join us here at howtotradeandwin.com. By the way, we're going to have the information. I'm going to release the information about the coaching on Friday, on Black Friday. So you guys be on the lookout for that. I'm going to put a post in Discord there and then on our social media accounts. I will tell you this. Yeah, I'm going to go ahead and tell you this. There's going to be a discount off because it's our, our launch of it. Beyond there's going to be a huge discount off what we're normally going to charge. If you get it, within this Black Friday, Cyber Monday kind of time. And there's also going to be a money back guarantee. How about that? That's how sure I am of it. I'm going to be teaching my day trading strategy that I use. Personally, I've never taught it to anybody else before. I'm going to teach it there, though. I haven't decided yet. I may limit the number of people we bring in with the first bit of coaching we do there. We'll see. But yeah, anyway, we're going to do that coaching. Like I said, we're going to have all the information about it out there, but it's also going to include the intelligent ways to use stop losses, how to do it effectively. We're going to talk about how to actually understand the market. It's something I kind of talk about every so often here, but we're going to go like a lot more in depth to get you off the nonsense everybody else is doing, which is leaving them always chasing price. I'm often in, you guys have seen it, we're often in prior, especially if you're in Discord with us, prior to things really moving, while everybody else is waiting for these longer term breakouts, right? Which means we get exponentially more profit. And so I'm going to do a lot of explaining on that. And then, of course, we're going to work on getting you through the things that cause you to have issues and the psychology side of it that keep you from being successful as a trader. So that's just a quick overview of whatever. But yeah, so you guys be looking for that on Friday, okay? So you just voted for Dovish in the poll. But what would you know there, didn't they, Mr. Wilkes? Yeah, I tend to think it's going to be a bit more dovish than hawkish. I think there's a lot of stuff coming in, information coming in that's kind of, even if the Fed doesn't want to necessarily pivot, within the next few months, where they're actually looking at slowing down because, you're getting a lot of that information coming in that says inflation may have actually peaked. So, yeah, we're going to look for that. We'll see what happens, right? Again, no crystal ball, but that would be in line with what I've been talking to you guys about for the last year and the expectations as we continue to roll into next year. Let me see here. You've been looking forward to the coaching, Dr. Zoggs? Yeah, that's it's been I guess it's just the natural evolution of what I've been doing, and just trying to figure out how the best way to provide the best of what I know, out there. You can't do it for free, guys. At the end of the day, we know, first of all, that psychologically, when you actually put money into something, you are much more likely to be serious about it. And I know there's a lot of people go, oh, no, if it's free, I'll still be. Most people are not. And then, of course, just, it's time and effort. And, it's for me, it's been, over 25 years of trial and error getting to where I am. So, again, there's compensated for it, right? I mean, it'd be, I wouldn't go to my mechanic and say, hey, fix my car for free, right? Or go to my mortgage company and say, hey, I need you to go ahead and just forgive my my mortgage here, right? Speaking of forgiving stuff, Biden and them have extended the student loan payment. I don't know if you guys noticed that. The student loan payment freeze, it was supposed to be the last time. It was supposed to start in January. Yeah. If you've been following my Twitter, I posted the link there. They've extended it to June now, or until the legal stuff gets taken care of. The courts decide. Here's the thing, guys. It doesn't really matter what these lower courts say. The district court, the appeals court. Most likely, this thing is going to go. It's such a big issue, and it means so much about what kind of presidential powers there are. That I don't see it not going to the Supreme Court. Honestly, I can't see them stopping anywhere prior to the Supreme Court, either side. Again, because with what the president stepping is saying he can do here, that's potentially a big expansion of those legislative, executive powers. So I don't see it really getting resolved prior to Supreme Court. So we'll see how that goes. So if sorry again, guys. So if you have a student loan that you're not paying on right now, and you've got, looks like maybe until June at least, longer not to, but of course, you're not getting interest on it right now. Interest is being withheld, right? It's not being charged on it. So I mean, if you're taking this time, any of this time over the last few years to pay down on it, you've done a huge service to yourself. But the same thing about the student loan forgiveness, right? So the judges, the courts are saying that's illegal and he can't do that. And so that thing's going to push up as well, I believe. But, if you were in that one and you thought maybe, hey, you're going to get some, forgiveness on some of your student loans, you may not. We'll see what happens. Again, I think that's one of those things they'll keep trying to push up there toward Supreme Court. Let me see here. You got to find a coach that will pay you so you will take it more seriously. Let me see here. Higher Low Crypto says, what's going on, man? He says, I'm not into them paying for student loans, but I won't lie. I hedged my bet and took one out for mine just in case. Yeah, it is what it is, right? So we'll see what happens there. Anyway, so we got a lot of stuff going on. We got a lot of stuff pushing in, legally with the government and whatnot. We've got, we're going to look at the stock charts here. And those indexes, man, remember there was that point I said, that one pullback along the way. I said if we're getting above that, it increases the odds that we may be looking at new all-time highs, right? And we are just about there. Dow is stopping just short of it at the moment. Man, so much going on. The dollar. Let's jump over here to the dollar real quick, guys. Let me see here. Yeah, I appreciate that higher low for sure, man. I'm trying to get better here. So man, oh man. So here's kind of where we are with the dollar here, right? So you know, I was talking. You know, this was that target area we had when it was down there in January of 2021. It did the reverse and headed up. So this EQ area here was the target area generally. You know, we figured if it's going to go up there, unless something happens along the way, you know, that's where we're kind of looking at targeting. We're right there. And so we're up there right there around the end of September, right? So we've been coming down now almost 2 months. And we've hit a low so far down here around 105.34, right? Now, we've potentially got A, B, C done here, right? Rallied up 50%. Hit my target right here at the green structure EQ. And we've pulled off here. You know, what we're looking for is a breakdown below 105.859. If we get that, that's going to add confidence to this count. That gives us a minimum expected wave, parentheses 3 target at 98.94. Now that's going to be 1, 2, and then 3 of the larger circle 3. So we'll go 3, we'll go 4, we'll go 5, which gives us the larger circle 3 on that. Which means it's for further downside, right? Now what invalidates that? If we're to break out above this swing high up here at 110.992, let me see here, 992, that would invalidate it. And then we'd have to look and go, okay, well, is this just some sort of, I don't know, maybe ABC or WXY? And then we've got to push up higher. If we do have a push up higher, we're looking at probably about 121 as a target. Okay? If we jump on over here, this is the futures chart here. Just to kind of give you some better look at stuff here. You can see that the 12-hour Hank's favorite chart. Now this is not the stochastic. This is the stochastic RSI. But you can see there's a bearish cross there in overbought coming on down. Volume spiking up with the current 12-hour candle. We got about another 3 hours and 14 minutes left in it. Breaking down below the hourly pivot there. So again, notice we came in here. We rallied up the R1. We're breaking down below the pivot. Usually that's a bearish indication, and we're going to head lower usually to a new low. So we'll see if we get that follow through. You can see that we've got the higher volume node there, the high volume node there, right around that same area where we're losing. So again, dropping below this, you know, that doesn't guarantee that it can't go up higher. But remember, when you're under the high volume node works as extra sell pressure. It works as a ceiling. When you're above it, it works as a floor, right? So again, doesn't look good for what we're looking at there. If we zoom out to the daily, you know, let me go out here to the monthly. So we had this big, you know, resistance here from, was this 85 or 86 over here? Yeah, 85. And then again here in 2001 and 2002. And what did we get here? We got this rally up in September that broke out higher, pulled back, printed it inside bar as a doji in October, and now we're getting this big follow through down to the downside. So I mean, as far as structure goes, usually that's a reversal structure, and it's happening right at resistance. So if I'm looking at that, I'm going, it seems more likely than not we're going, you know, that this is 5 waves up from down here at the beginning of I'm sorry, over here, the beginning of 21. And so basically just, you know, 1, 2, 3, 4, 5 here. And so, you know, is that the end of this here? Is this, you know, 1, 2, 3, 4, 5? Because that's the way I'm looking at it. I'm looking at this as 3. This is a flat as 4. And this is 5. And so if we go 1, 2, right? And then 3, 4, 5. Well, 3. 1, 2, 3, 4, 5 gives us 3. And then flat as a 4. And then 5 up. I mean, you know, that means 4 is down here. And we generally would look for this area to be the initial target. wave 2, our first target is usually the wave 4. I mean, this is wave 4, this whole area, but usually it's closer to that wave 4 extreme, that support area. And so that's its initial target, right? If we look at this, I mean, that it gives us 50% right there. Yeah. We can get to 70.5 right here around the high volume node, 78.6 as well. So at least coming off that, if this is 5 up off here, things get pretty interesting, right? If this is maybe okay, if this is maybe A and a B, and then this is 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. Maybe an A, B, C. I mean, obviously it's a pretty large ABC, right? But not unheard of. That would mean that we could really drop down here. Maybe Hank will get his 86 and lower, right, Hank? Do I think we see a face melting scenario soon? What are you talking about? For which one, Big Fabe? Oh, there's Hank saying mid-80s. It's a joke. Yeah, no, yeah. You thinking the same thing I was when I said that, yeah. But, we'll see what happens here. There's a lot of things going on. Again, if you get off the charts and look at fundamentals, which I can't say that I definitely understand them any better than other economists out there, right? But so far, my take has been pretty correct here over the last, publicly here since, 2018. We talk about interest rates and the dollar and whatever, right? But, it's very complex. Euro dollars, I think, are a big part of it, and they're very complex understanding that whole thing, especially since we don't know how much is actually out there and everything's going on. And we talk about the lack of dollar liquidity and stuff like that. There's a lot of moving parts. So, I mean, I could see it where this is, just like a 1, 2 and rally up higher, and then, things just really get kind of crazy, right? But so we're going to just look at right now and see, do we get this pullback down here toward this 90 level and then go from there. Let me see here. Fuboswani says, his fib model went short at the same spot as my wave 2. Nice. 102.68 target for me, looking for confluence on your count. Yeah, we'll see how it goes there. But, definitely nothing really looking overly exciting for the dollar at the moment as far as positiveness goes, right? Positivity. I've talked before about the idea that it looks like the cable capitulated there when the pension funds almost went gone, right? And the Bank of England intervened, right? And then around the same time, we talked about the Bank of Japan's intervention at that 150 level for the yen, right? All right, about the same time. And so I think there's a lot to be said about that confluence and timing of stuff that happened there. With the dollar itself hitting the target that we were already looking at from way back over here, almost 2 years prior, right? So we'll see how it plays out. But I think right now we just look for that continuation lower toward 90. If we get that, then, downside pressure on risk assets is pulled off, right? So stocks, have a lot more leeway to go higher. It doesn't guarantee they will, but, if you're taking money out of the dollar, putting it elsewhere, usually when it comes out of the dollar, it's going to more risk-on assets, right? It usually goes into the dollar as a safe haven, right? So the thought would be that if it continues to come out of there, it continues to go in the stock market. It continues to go maybe even into Bitcoin and whatnot. I've seen some people talking here lately about how they expect stocks to continue going up, but not Bitcoin. And I think that's I think that has a lot to do with emotional trading. Everybody's like, oh, contagion. It's a big word, right, with FTX and everything. Oh, look, and Genesis is going down, and Grayscale is going to have to sell, unwind and whatever. And, that doesn't make a lot of sense if you think about it. Like the Grayscale Bitcoin Trust, for instance, GBTC, right? It's worth a lot more. The company itself, the management fees, a few $100 million a year or whatever. I mean, that's worth a lot more together than to liquidate it, right? So I think people will be jumping up to buy it, and so in spite of all this news and all this contagion risk and everything else, supposedly Bitcoin has been rallying, right? So I don't know, I think there's a lot of emotional stuff going on with Bitcoin right now that I don't know that it necessarily translates into the charts, right? So let's go take a look at that. Let me see here. Oh, you're talking about melt up, blow off top, and the new all-time highs in the SPY and Bitcoin within 5 months. I think you'd have a much easier case for, the stock indexes to hit that new all-time high in 5 or 6 months than you would Bitcoin. I don't think Bitcoin hits it in the next 5 or 6 months. If it did, wow, what a ride that would be. But man, you're talking about going from, what is it, 16, about 17 right now, to 69,000? I don't know. I don't think so. I think people are too scared at the moment to get in there to drive that up like that. It's not usually what happens with bottoms, especially with Bitcoin. Such a strong drawdown length of time there off that all-time high so far. Yeah. Let me see here. David, what's going on, man? Checking in from Australia. Great to have you catching us live, man. All right, so let's jump over here, guys. Let me see here. All right. So I've got this kind of potential count here coming off the idea that we've got this ending diagonal going on. So again, this would be 3, this would be 4, and this would be 5 as an ending diagonal. So ABC is 1, 2, ABC is 3, 4, and then, 4 being a triangle here, and then 5 coming down. Let me see here. Yeah, coming down here, in which you got like an A, B, and then 1, 2, 3, 4, 5, right? Or I guess you could go 1, 2, 3, 4, 5, A, B, C here. But nonetheless, you get that shortened thing. So the idea is we've got a triangle here, okay? So we've got A, B, C, D, and then we've got A, B, C, D, E for a triangle for wave E. And that's, that's not a normal thing. It's a rarer thing, but it does happen on occasion. Let's see if I can put this in here for you guys so you maybe get a visual understanding of what I'm talking about here. And so, yeah, so, that would be the idea of what's potentially going on here. As it was developing, this is what I was talking with our members about, potentially being in play, right? Let me see here. And so again, just right there, and then right here. Overall, just kind of making a bigger triangle here, right? And so off the bottom here, it looks like we got a 1, 2, and then a 1, 2, 3, and 4 is a triangle. 5 gives us 3, 4, and 5 rallying up here, right? So if we jump to the 1 hour, you see the 1 hour is just now breaking out and rallying up after what appears to be a 3-wave pullback, right? But, again, we have to zoom in here and zooming in, I mean, I guess you could maybe make an argument for 3 down and then a WXY up, and then 1, 2, 3, 4, somehow a 5 here maybe as a flat, and then going up. But I think the most important thing to look at right now is we've broken out impulsively here above the hourly pivot, pulled back to the pivot area, triangle area, found support, breaking out higher. So what we're looking for, if the count's correct, then a breakout above 16,802 should signal that wave 5 is done here, which means potentially, the whole thing is done. Now, obviously, that goes against a lot of what, a lot of the big accounts out there on Twitter are saying. And again, I think a lot of what they're saying has to do with this idea that, the same thing when we were down at 3,100, everybody said we had to keep going down below 100. And when we were up there, up there around 62 and 69,000, everybody saying, oh, we had to keep going up, people just tend to be very emotional at the extremes. They tend to get really loud. So for now, I'm playing this as it is, right? Let me see here. Never forget what it would mean in the real world if the basket of currencies that is the DXY would rise to the pattern target. It helps to see if they are realistic. Now, I mean, maybe. And the one thing I've learned about markets over the years is don't expect, like if you say, oh, something can't possibly happen, that's usually when I start thinking that way, it's usually my clue to step back and go, well, actually, right? Because, I think early 90s, Bank of England, George Soros and friends broke that, right? So there's a lot of things that happen. But I think if it did hit that huge target, went up there 150 or something like that, I think something like that marks like quite possibly the end of the current global financial system the way it sits. Yeah, I think there's a good chance for that. But, at the end of the day, we say that, but if we look back over here, we were up here at, at 128, 129 back here in 85. I mean, so that, that says, okay, well, we can handle that. But, of course, we're looking at, potentially 150, 160, something like that. And that, I think that increases the odds of craziness happening overall. But I don't know that it necessarily means it's the end. Like I said, for me, I think there may be a good case for maybe the end of the global financial system the way we know it. But something else will just take its place. Does that mean Bitcoin? No, I don't think so. And I know that hurts a lot of people's feelings because I'm not a crypto bro. I'm a trader, right? You guys know this. We've talked about this before. So I don't know. I think at least that helps within ways. I don't get very bullish about it. I don't get very very positive or very negative, right? So I'm not positive like the maxis. I'm not negative like the doomsayers. I just trade the charts, right? I look at the possibilities. I still think there's a lot of potential for Bitcoin and higher prices. But that doesn't mean that I think that there's any real likelihood that it's going to become some kind of global reserve currency either. Now, I could be wrong on that, but I don't see that happening at the moment. Because if that were to happen, then it changes the power structure of governments, of the largest governments in the world. And I don't see that happening. So we'll see, right? Let me see here. Would you say that if we close the month at 17.5 on Bitcoin that we could see a potential double bottom? Are you talking about double bottom right here for the month? We would have to, if this... I'm not really overly excited about this double bottom because you have this sharp move up here and then this sideways and down. But if this were to be a double bottom, you'd have to break out above the swing high here at 18,140 and 62 cents. And you would need to break out above it impulsively because if it's going to be a double bottom, price needs to break out and stay out above that there. I think that it's too that the difference here in price is too big to say that this would be a double bottom. Yeah, I don't think this would be a double bottom if that's what you're talking about there. Yeah. Yeah, between June and November. Yeah, no, I don't think that would be a double bottom. But the distance between the low here at 17,567.5 and this one over here 15,7 or 15,460 or whatever. I think that's too big a thing, really. to be like a double bottom. You'd want it closer up here around 17,000 if you were looking for a double bottom. But I think potentially, maybe a double bottom here, but I'm not a big fan of that. To me, again, this just looks like an ending diagonal here. And so, so what would happen, honestly, guys, all these accounts right now that are trying to get you, they're trying to convince you why you shouldn't be in and why you shouldn't be trading and why you should only be going down and shorting it. But those are the same types of people that over here, if you guys will remember back over here, they said this had to continue going lower, had to go way down, below 700, below 70, whatever. And then when it didn't and it rallied up here around 4,000, 4,300, they said, oh, it's going to get rejected and again, going to go way down there. It didn't. And they kept arguing all the way up and it got to 6,000. Oh, it's 6,000. It's definitely going down there. And then it didn't again, right? And then they finally jumped in up here. How do we know they jumped in up here? Because look at the volume. Look at the volume on this rally here. Very little volume overall, right? The volume comes in right up here. Right up here at the top and the one next to it. That's where the volume came in. That's where all the selling hit. And we know there's a lot of buying because look at how big that volume is. If there wasn't a lot of buying, there would have been a lot less volume and price would have fell a lot further. But because there was a ton of volume and price only kind of did this thing and then this thing, there's a lot of buying that was trying to go on up there. And again, over here as well, as we went through that, and then it started kind of backing off as it went down. So, but they're the same type of people who would be here, right? And so what would happen? Well, they would swear that it's going to get rejected here, 19, 20,000. They would swear it's going to get rejected here, maybe at 25.5, but they probably look up here around 29.30. And then they'd swear it's going to get stopped over here at 38, 39,000, 40,000. And then they'll probably get in, up in this area here, this 50 to 60,000 area, maybe a little bit higher, right before it breaks out. But they would have missed all this rally here, right? So I think if you're a trader or if you think you want to be a trader, you have to get your mind out of all the longer term nonsense. Don't worry about it. Trade your local charts. Work what you're doing. Trade and make money. That's what you should be doing, right? So, again, looking here, what we want to see right now is we want to see a breakout above 16,802 because if the count's correct and that's a triangle, then that'll say that wave 5 is done. Why? Because you've got a wave down and you can't, this would be wave 2 and you can't get wave 2 above where wave 1 starts, right? So it would have to be 5 waves down complete for wave 5. Once through there, your target probably becomes this this area right in here. I mean, you can use a big range here. You can look at the EQ right here at 17,450 or so up to this EQ at 17,875. This is the June low, the bottom of the range, right? So that becomes your next target. If you can continue to break out above this blue structure here at 18,155, then your target becomes the daily pivot in this descending resistance right up here at around 19.9. If you're breaking out impulsively through that, I mean, I think there's a good case to be made for the bottom likely being in. But, once you do that, you've got to get through your swing highs then. So you've got, this 21.5 area. You've got this, whatever this is right here, right around 22.8. And then, of course, this one up here at 25,250 or so. I mean, those would become your easy targets on the way up. So, yeah, I think there's a lot happening at the moment here. We'll see how it plays out. But, yeah, we'll see how it works there. What'd you say here? Aramis, what's up? I've seen Capo Bear post still. SZ and XO pivot their views with price action grade follows. Okay, yeah. What's going on, Telltale? Good to see you, man. So yeah, I mean, that's what it's all about. I mean, it's important to have maybe an idea of what you think may be going on in the bigger picture. I always talk about that. But if you're trading, you should definitely be trading the local areas, right? So let me see here. So on the daily, I have the MACD here because we're curled up, wanting to cross bullishly, trying to cross that 0 line on the MACD. And so if we do that, that should give us a rally. That should give us a rally at least into this kind of, mid-19s, 20,000 area, right? You can see that we've got basically this bullish divergence off the daily here, right? So you had a slightly lower low. You had an RSI, a higher low there. I mean, a lot of things going on there to suggest we should be going up, right? This actually, I've got here, so I don't usually use a lot of specialty indicators, really look at. I mean, I look at them every once in a while, but there's usually issues with them. This one, what I like about this one is I talked to the developer, and even on their site, they put in their facts section, that no indicator is going to guarantee that you're going to be, that it's going to be correct, right? So if you have indicators that say, oh, this is going to be a buy, this is going to be a sell, you guys know that you do that. And if you're a new trader, you have to go, oh man, so that's all I need to do. I don't have to learn. And then you get there and you're like, well, what the hell was wrong, right? I like that they actually, but they never say that in those, on the indicators, right? I like that this guy actually does that. So basically, the link is under, if you look under the live stream, there's a link for it in there. And they've got I think they've got a Black Friday special going on right now. But I've been toying around with this and kind of checking it out. And it's pretty cool. So what it does is, especially if you know a bit more about what you're doing, you don't have to be like an expert trader, but you understand things like a little bit about supports and resistances and, maybe order blocks and stuff like that. This really kind of helps you. It can help you kind of understand where these levels are, right? So they've got a whole bunch of different settings in them. So I've got like the previous week's high and low set and Monday's high and low and stuff like that set on there. It gives you these change of character levels. It gives you a break of structure levels. It gives you these order blocks. And the cool thing it does in the order blocks is this green and this red kind of tells you the strength of buying and selling in that area. And then it tells you how much activity happened there, and it gives you how important the area is in relation to other ones. So if you maybe find yourself struggling a little bit with understanding where different order blocks are, where different resistances and supports are and things like that, I don't know, it may be something that that you might like. I'm going to bring it on here, keep bringing it on here, looking at it with you guys, and kind of showing you how it's working. It gives you these liquidity grabs in here as well. But yeah, I mean, if we look at this, here, this is the daily. You can see that we've got this order block up here, right? But that's all the way up there, 21,000, right? You can change the time frame here if we zoom it into, say, the 1 hour. Now, this right here is the 200 EMA, right? So that's kind of where we're hitting here. Now, according to this indicator here, this right here says it's a liquidity grab, right? What did it do? You had this order block, which was taken out here, shoots up into this next order block, which is why it got sent back down, right? So in there. So it kind of just gives you the setup, right? And so here's your order blocks on the way down as well. So if you're looking for, okay, where should I be looking for maybe, pullback targets and whatnot? I mean, again, if you're pulling back, these make good areas here, right? If you pull back below the swing low here. This tells you where you're getting premiums or discounts on the buying and selling. I'm not going to go into a lot of explaining this. He's got some pretty good videos on it. But that link, is underneath the thing there. So I don't think that you should get it if you think, oh, I'm going to get it, it's going to tell me what to do. Don't do that, not with this indicator, not with any indicator. You have to understand what the indicator is doing. And this one here, right here, just gives you some great understandings of the levels that are going on. And there's a lot more settings actually in it. You can go through it if you want to check it out sometime. Right here, whole bunch of them that you can work out with the way you want it. For me, it makes most sense for me to have the order blocks on there, maybe some break of structure, change of character stuff going on there. And then, you know, some highs and lows, Monday, weekly, going on there as well. If we jump in here to the 15-minute, you can see we're above the 200 EMA on the 15-minute. Again, you can see we had this breakout here above order block there. Premium 80% comes back down. But even right here, you can count 1, 2, 3, 4, 5 waves up, right? Crossing bearishly and overbought. Rejected just prior to overbought the RSI. If you want to look at the MACD here, you can see that's kind of closing. It's starting to, you know, it was pulling apart here. And now it's kind of, maybe, I don't know if you can really see that blue there, but it's starting to curl back over, starting to come back closer together, which, you know, when it does that, usually indicates you're getting this reversal. You got this huge kind of bearish engulfing candle printing after printing the large upper wick. I mean, to me, it says we probably head down a little bit here. And of course, you can look at the volume here, as we always look at, coming at that swing high. So you have this rally here, and part of this overall rally up in that huge oh my gosh, I'm so sorry, guys. But you've got that, that's the largest bit of volume we've had, even compared to the low here. So likely you're going to have a pullback, right? We can see that the this order block down here is actually right around that high volume node. So if this is 5 waves up here, we can see that that kind of gets us just beyond the 38.2, but we can see that the 50% comes right into this higher volume node over here as well. So I mean, you know, a lot of you know, you can see that confluence in these in the target areas and where everything is. You know, if we're to come back and continue to break down below that swing low right there. So yeah. Let me see here. Who is this? Poison, what's up? It says, what about test pivot on 15-minute? What do you mean test pivot? What are you talking about? Can I have pivots on there? Oh, there they are. Oh, test the pivot here? We already tested it right here. We pull back, tested. So we rallied up into it, got rejected, right? Pulled back, broke out on volume, right? Large volume, large candle spread. Rallied up almost to the R2, pulled back to the pivot, rallied back up, broke a little bit higher out there. So, I mean, you know, again, wouldn't be surprising to see this pulling back here toward this kind of 16,000 area, you know, getting like a 50% pullback. And that I mean, that's basically, oh, I was looking at the pivots. I'm sorry, that wasn't even the pivots there. Pivots down here, yeah. So we came in sideways here. Rallied up through the R1 into the R2, almost, you know, through the R1, almost up the R2, pulled back. So wouldn't be surprised to see it come back here toward this level if it was to continue breaking down below the swing low here. As long as we, I don't know, you know, even just getting back there, I think we break out above this swing high, you know, and again, our targets still are, you know, it's still going to be this 16,802, and then the R1 pivot here on the hourly right around 17,000, 16.5. And then, of course, beyond that, like we talked about, I mean, that's just how I would watch it there if it was to do that. Yeah, on that thing, the order blocks on the, yeah, so, you know, again, if you don't know a whole lot about order blocks and whatever, this is a great, I think they did a pretty good job of coding this, honestly. But it gives you an instantly visual information there. I think they said, like I said, I think they've got like some huge discount going on right now for lifetime purchase of this, and it also gets you this back testing suite thing that they're going to be releasing as well. But I think this is going to be the last. I have to go check again. I think it might be the last time that they do the lifetime offer on the algo here. So you know, if you think it's something that would help you, you know, if you're looking for something to help you in understanding order block levels and stuff like that, and changes characters and break a structure, stuff like that, I think it's a good thing. If you're looking for it to tell you without you knowing what to do, how to trade, do not put your money in it, guys. Like I said, even in their fact section, he says, you know, listen, you know, you got to know what you're doing. You can't just get an indicator and expect it to tell you exactly where to buy and sell, right? Because that's going to leave you like most indicators out there where you end up losing money because it's not 100%, right? The more you know about trading, though, I think the more helpful it could become if you wanted some kind of help like that with it. So, yeah. So we're getting this big move off here. It's 1:30. I don't know what the FOMC minutes were. If any of y'all know, maybe you could let me know real quick. Let me see here. Well, I'm pulling it up here. Let me see here real quick, guys. We'll go over this with you. Fed officials see smaller rate hikes coming soon, minutes show. So again, knee-jerk reaction coming off it. But, you know, again, we were already, you know, at this point where we were, you know, working on 5 waves up. So no real surprise getting rejected, right? But now we just want to see a 3-wave pullback that terminates prior to the swing low and then a breakout higher again to kind of get us going on that. Let me see here. Officials earlier this month agreed that smaller interest rate increases could happen soon. Let me see here. Markets widely expect rate-setting FOMC to step down to a 0.5 percentage point in December following 4 straight 75-point rate hikes. Yep. Though they hint that smaller moves were ahead, they still see little signs of inflation abating. However, some members expressed concern about risks to the financial system should the Fed continue to press forward at the same aggressive pace. Remember, that's what I talked to you guys about, right? I said even if inflation was to continue being, you know, a pain in the rear end, you know, the effect that because the world runs on dollars basically, right, on U.S. dollars, so the effect that the Fed has by continuing to raise so strongly, and how hard it hurts the rest of the world, would be a reason why they wouldn't continue doing it. Remember, we talked about that just a few months back. So it looks like they're saying the same thing right here, same thing they're talking about. They're concerned about that. Substantial majority of participants judge that slowing in the pace of increase would likely soon be appropriate. Yep. The uncertain lags and magnitudes associated with the effects of monetary policy actions on economic activity and inflation were among the reasons cited regarding why such an assessment was important. Yeah. So basically they're worried that, hey, we don't, you know, that what we do has a lagging effect. That's what they're saying. What we do at the FOMC here has a lagging effect. And because it has a lagging effect, we're not sure how much of a real effect we've had so far and how much it could be already. So if we continue to hike so crazy, you know, we could already have really kind of got it all together and slowed down that inflation and potentially reversed it, but we just don't see it yet. And so if we continue to hike crazy, it'll do a lot worse, right? It'll hit a lot harder than what we plan. And that's kind of what they're saying there. So, yeah. Several Fed officials have said in recent days that they anticipate a likely half-point move in December. We talked about that, yeah. Inflation data likely has been showing some encouraging signs while remaining well above central bank's 2% official target, yeah. The CPI in October was up 7.7% from a year ago. That's the lowest reading since January. However, the Fed's more closely followed personal consumption expenditures price index, PPI there, which excludes food and energy, showed a 5.1% annual rise, which is up 0.2 percentage points from August and the highest reading since March. So a little bit conflicting data for them there. But yeah, we'll see how this all turns out. So, I mean, it looks like we're going to get what we're going to get. Reactions right now, are what we kind of expect. I mean, we can see it looks like a cruddy candle here. Let me kind of close this off. But look at that, pulled right back to the pivot here. So it's possible this could still be, if this is 3 and 4 here, then it's possible this could be 1, 2, and head up higher. If that were to happen here, because again, look at the 1 hour. Look at the 1 hour. We've still got 26 minutes left, guys. So almost half of the 1 hour candle still to go, right? So if this were, say, to be 1, that would kind of give us an expected wave 5 target up here around 17,183 at least, right? And if that was it, then wave 2, 38.2, 50% circling the hourly pivot. Remember when we talked about that? Usually you're going to get 5 waves up off the S1 pivot area up into the R1 pivot area, maybe a little bit above it. That usually does wave 1. Wave 2 pulls back in 3 waves to the pivot area, which is usually a 38.2 to 50% retracement. And you head up, right? So if that were to be the case, and this were to hold this support here, and this was just to be wave 1 of 5, for instance, yeah, I could definitely see that. And wave 5 could continue to overextend up into the green supply structure EQ around 17,450, even as it continued to go up there, as we talked about. So, yeah, you got your targets along the way, and it's important to see what happens right here, right? Let's see here. Deadly, what's up, man? Happy Thanksgiving, man. See you checking in. Is that Sayaz? It says less aggressive rates? Yeah. So, again, this is what we're looking for, right? And so it just kind of adds some support for the idea that potentially markets may have bottomed and may be looking to rally to new all-time highs, right? Good to see you checking in from New York, man. Poison wants to know, if we broke out lower, what would the target be? Oh, so yeah, I mean, if we were to break down, I've still got the target down here around that 14,000 to 14,100 area. I've got this descending wedge kind of support here, right around that area that I'd be looking for it to come down to if we were to break down below that swing low. Yeah, nothing's changed on that. Still be the same one. Let me catch up here real quick. God, I've already been here an hour. I got to get done with these charts for you guys real quick here. Let me see here. So the Dow. So this is on all 3 indexes that we look at, right? We were looking at this pullback right here. We are just about there with the Dow right now. So that is 34,281.36. We're at 34,262. So less than 20 points off that right now. If we break out above that, we were looking at maybe as being a 1-2 and then potentially a 1-2, right? But I said it's possible we break about that. This could just be an ABC right here, a short C, right? This is breaking out above this point is significant. It increases the odds quite a bit that a new all-time high may be coming out. And so when you talk about Bitcoin also hitting a new all-time high in 5 months, I mean, you're looking at, basically 34 here getting up to 30, not quite 37, right? It's 10%. Bitcoin is a lot further than 10% off its all-time high, right? So yeah, I mean, I could see risk-on assets potentially, like stocks potentially rallying up to all-time high, and then maybe Bitcoin kind of following after. And in that scenario, I think it would be possible that we would see stocks top out prior to Bitcoin. Bitcoin being the more what's the word? Risky. So, and the one that people expect to make bigger returns on in a quicker amount of time. So I could see as stocks top out, that money goes into Bitcoin and finishes off its rally up, wherever it's at that point. So you top out on stocks and then follow with Bitcoin, and then, everything just goes to hell in a handbasket. I could see that potentially happening. But, yeah, so the Dow looks like that there. NASDAQ composite. Oh, man, what happened? Yeah, it just went away. Dang it. NASDAQ composite here. Let's see how close we are on that. Remember the NASDAQ being much more tech heavy. Let's see here. We rallied up, broke out above the hourly pivot, pulled back, tested the support. Printed a nice hammerish type candle there. A huge bullish engulfing candle following up. This move down and back up is based on that FOMC minutes release. So knee-jerk reaction to downside, rally up higher. Filling in this gap over here at least, around 11,358.41. But where are we at? That same point. Now see, the Dow is all the way up here by it, but look at the NASDAQ. Has a lot further to go to get to that same point, right? That's that same pullback that I talked about. Again, this being because NASDAQ is more tech heavy, tech been getting hit harder. The Dow is blue chip stocks, much more broad based, so a lot, wider sector. So would explain why that one's rallying, this one hasn't as much. But again, like the Dow, you need the breakout above this here. This is at 13,181.09. And then I'll look at the E-minis here, which is your S&P futures. So they're nearing a breakout of their local swing high here at 4,050.75. And they're a bit higher up because, again, they're somewhat tech heavy as well, but nowhere near as much as NASDAQ. But definitely nowhere near as broad-based as the Dow, which is why we track all three. This is kind of the middle. But as you can see, it's rallied up further than the NASDAQ. But it still needs to break out above its wave 2 up here at 43.27.5 to get to that same point that we're looking at, that the Dow is almost done. Locally here, questionable on the count at the moment. It looks like this could maybe be 1, 2, 3, 4, 5. So A, B, and then 1, 2, 3, 4, 5. So, breaking out above the swing high here at 50.75 could potentially see us rallying up here toward 41.37 or so, maybe even 41.60 area. To finish this leading diagonal is a 1, then 2 will pull back, and then we'll go for 3. So it does look like we want to break out higher here. And again, if this is a diagonal, you've got ABC as 1, 2, ABC is 3, 4, and then you'd have 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5, probably get up here, finish that out. So yeah. Something we're still looking at there. Oil has continued to pull back. All right, so there we go with oil. Potentially, I'm looking at this right now as a 1, 2, 1, and then 2 is a flat here. Could also be 1, 2, 3, 4 as a flat. In a bit of a leading diagonal kind of way, maybe. If it were to close back up into up above 92.93. But right now, looking at this being like a WXY for A, and then potentially a WXY or an ABC here for B. A couple of days ago, we had this great daily candle, large lower wick here, very small body up near the top, pushed up a bit higher into the into the hourly pivot here, rejected, pull back down here around the EQ of this large wick. As I often teach you guys, you know, when you leave a lower wick, you'll usually pull down into it before rallying back up. So, you know, kind of looking at that right now. If we can break out higher here, this keeps this potential $100 target alive for wave either 2 of 3 or wave 4 here, as I explained. Be looking down further. If we break down below the swing low here, then things change up a bit. And in that case, it may be A, B, and then 1, 2, 3, 4, 5, a little bit lower here to finish out wave B to give it that ABC. And then you get the rally up to 100. So I don't necessarily think, I think oil maybe still has some further upside toward that 100 area, even if it has to dip down, you know, $71 or something first before it does. I think we've still got that $100 rally and then the pullback on it. Let's see here, silver. So, silver doing its thing here on the daily. You can see that we rallied up through the R1, up toward the R2, pulled back to the R1, found support, rallying up impulsively now, just now starting to cross bullishly. Stochc RSI on the daily. RSI curling up. I think we should continue up here. Minimum expected wave 5 target at 23.62. Secondary target there at 24.3. So I think we've got some upside here for silver with that. So yeah, so now we just want to see what happens here on Bitcoin. Is this maybe 1 of 5? So 1, 2. We'll have to see how it plays out here. Let me see, what do we got here? There's 3 waves down. On the 5 minute here, you can see it, right? A, B, C. So 5 minutes suggests maybe that we're going to head up higher there. We'll see what happens. 15 minute, you know, looks much more like a, you know, like an A, B, and getting a C here, but 1 hour though has a lot of room to rally. 4 hours pulled back a little bit off the topped out and overbought here, so it's got some room there as well. And of course, daily continues to have room here. It's just now starting to break out into overbought on the Stochc RSI. By the way, the system I'm going to be teaching with the coaching had an entry right here on the close here of the daily, and I'm going to teach. That's the system I'm going to teach with the coaching. And so yeah. We had another couple of entries there with Discord that I've mentioned with that system that have turned out really well. So, you know, again, it's the system that I use daily. Never actually taught it to anybody before, but we're going to, and we're going to see how you guys like it. Like I said, there's going to be a money back guarantee and everything. But yeah, I'm going to put all that information out on Friday. So if that's something you guys are interested in, be sure you check it out. You know, look for the post there on social media or on our Discord server. It's going to be a significant discount off what we're going to charge afterward, and then of course, like I said, money back guarantee. My system is just one of the things we'll teach in there. We'll also go over how to understand the market, which is, of course, as you guys have seen, is different than the way most people do, and why we look at it that way, and how it's much more effective, as well as working through the blocks and things that traders generally have psychologically that keep them from being successful. And then, of course, you know, the thing I believe is most important, which is proper risk management. And we'll look at multiple ways to manage your risk properly. And there's also going to be live trading in that as well, just so you guys know. I always forget to mention that. But that way you can see me using what I'm going to be teaching you guys in person. You can trade there with me, you know, as we do that through the coaching. So there you go, guys. that'll do it. I think things aren't looking necessarily terrible, but for Bitcoin, I definitely want to see a breakout above 16,802. And then after that, really the swing high up here at 18,140.62. That gets us back into the trading range from June, right? And yeah, I mean, the volume here on Coinbase, of course, much lower on this drop here than what we had here. Let me go and show you this chart real quick before I go. So this is the big BLX chart, and I've shared this with our Discord members. Basically, your red areas were the bear markets, green areas was the bear market low to the halving. Okay, you've got your drawdowns here, what they've been, and so they've gradually gotten smaller here on the BLX. It was 91.68% the first time, 86% the second time, 84% the third time. This recent time, it's about 77.5%. As far as time till halving's expected to be around March 23rd of 2024. That gives us about 497 days. We had 518 days from the 2018 bear market low to the halving. We had 511 days from the 2015 bear market low to halving. And we had, of course, here 378 days, this first time here. So, we're kind of in that mix as far as if the bottom were to be in. We're in that mix as far as time to get to the next halving. The pullbacks, in each period have been less. We've got this large bullish divergence here on the weekly RSI, and Stochk RSI is bottoming out and oversold here almost. So yeah, I mean, a lot of potential on it as far as the BLX goes here, volume wise. Again, you can see it's still a bit less than this volume, this capitulation volume here, but a little bit closer than what we saw with Coinbase. But again, this is aggregated volume here across the exchanges that are weighted in how the exchanges are weighted with their pricing here, right? So, I mean, I think there's enough here to say, well, even if you think it's going to go further, I think there's more than enough information saying, well, you should be paying attention because it might not. And that's what I'm trying to say here. I'm not guaranteeing you the bottom's in or anything. But there is a lot of information, a lot of things going on here suggesting that that there very well may be, again, the idea would be that this whole thing is the bottoming process here. Because a lot of people go, oh, well, this can't be the bottom. It's just one candle down. It's 1 week down and a couple weeks over. This would be the lowest price. That's an event. This would be the bottom. This is the highest price. It's an event. This was the top. Okay? So, I think as traders that you have to understand that if you don't understand that, I think you're going to really kind of put yourself in a bad way. But, the weekly candle could turn out pretty interesting. The U.S., people are really kind of not so much in today. They've kind of left early if they even went to work today because Thanksgiving's tomorrow. Many of them are going to take off on Friday. The markets will be open half a day, stock market and whatnot, but you generally expect pretty light volume. And then you have the weekend, and so I think there's a lot of light volume from now headed through the weekend. And we could see, we've got the potential because of that for quite a large weekly candle to print. But we'll have to see what happens with it. But I think, I hope you guys come here because, even if you don't necessarily agree with my particular outlook, I hope that you see that there's some merit in at least paying attention and watching and not being so closed-minded that because that closed-mindedness is what ends up losing you money, guys. It's not because you're wrong. It's because you refuse to be profitable. Okay? Does it make sense? Traders in general lose money not because they're wrong, but because they refuse to be profitable, because they hold on to being wrong so tightly because they feel like, oh, I can't, I went public about the way I feel about this. I can't possibly change the way I'm saying things. Otherwise, they'll mock me or something. Stop worrying about the nonsense, guys. Most of the people on Twitter, crypto, whatever, aren't even traders, guys. So doesn't matter what they think, okay? Just, strong opinions, weekly hell, as Peter Brandt says. In other words, be willing, be fluid, be like water, be willing to change when the information changes. Okay? So, that's it, guys, okay? Have I ever contemplated writing a book about trading? I'm actually in the process of writing two right now. I might set up a pre-order for the first one. I'm getting close to being done with that. So you guys keep paying attention to that. We'll see there. But yeah, I've again, the idea is, how do I distill the information that I have and what I've learned into ways that are helpful to people. Some people, like books a lot better than anything else. Some people like videos. Some people like live. Some people like in person. Yeah, so a lot of possibilities out there for sure. Yeah, I know time to write is a tough thing, man. It's been my struggle. You'd buy those books? I'd like to hear that, man. Anyway, guys, so yeah, when is the coaching actually starting? Like I said, all that information will come out on Friday. It'll probably be, I think, within a few weeks of that, before the end of the year. It's just been, I was hoping to have it start at the beginning of December, and then I came down with COVID, so that knocked me back 2 weeks, which is why I don't have that information out yet. But like I said, I'll have it all set up for you guys on Friday. You can decide if that's something you're interested in, and jump on in there, and then we'll be starting up pretty quickly after that. But all that information will be on there too. Books are so 2020. It's all about online courses now. Yeah, everybody's got a different way of learning. For sure. Anyway, guys, hey, listen. I appreciate you guys, seriously. I know, I tend to be a bit longer on here than most people. But it's because, again, I discuss things with you guys. I talk to you. If you've got different thoughts, I try to pull up a chart and I try to look at it and either agree or maybe explain to you why I don't feel maybe that's the way it is, which doesn't mean I'm going to be right. But just so you have a better understanding of what I'm looking at and why. The goal here, guys, again, is to just try and figure out what's potentially going on with the charts, with always keeping that bigger picture in mind. It's the shorter your time frame, the easier it is to lose money. Yeah, it's all about discussion and kind of getting to know you guys and talk with you about it, all right? So I hope you guys have an amazing week. Thank you guys so much for your well wishes and everything. Like I said, I think I'm a lot better off now. Just need to finish this up. Hopefully I'll be just perfect by Monday. But yeah, like I said, pay attention to the socials and our Discord if you're there. Friday sometime I'll go ahead and release that. That information about the coaching there, and you guys can get set up. I might even do an extra special. Hell, why not? Okay. I'll even do an extra discount for, I don't even know yet, first couple of people or something that sign up when I release the information and put the page up and everything. So if it's something you really think that you might be interested in, then definitely be paying attention. And if it fits what you're looking for, you might be able to get it even cheaper. Anyway, guys, hey, listen. At the end of the day, the only thing you control in the market is how much you lose. Am I right? That's it, guys. So whatever you're doing out there, please, if you get nothing else from me, please get the importance of proper risk management. You don't have to agree with me in the way I'm viewing the chart. You don't have to agree with the way I trade. But I promise you that if you can get down proper risk management, you are significantly more likely to be profitable over the long run, to be able to be a trader, to actually enjoy trading as a lifestyle for years and years and years. If you don't, you won't be able to. All we have to do is look at Caroline, right? I don't believe in stops. The way we trade, they're worse, right? We saw how well that worked for Alameda, right? All right, guys. Hey, you guys have an amazing week. I'll be back. I won't be on Friday, obviously. I'm going to be off, with family and everything, celebrating Thanksgiving holiday. But I'll be back on Tuesday, 11 a.m. Central Standard Time. We'll see you there. If you're interested in that indicator, guys, the link is below this video here, and you can check it out. I've never actually promoted anybody's, self-coded kind of things. But this company, talking to the developer and everything, and seeing the company's belief and how they look at trading everything. I think if you saw what it was doing there and you think that would help you, I think you'd be doing it. But again, guys, as you look through their facts, they'll tell you, it's not going to guarantee you 100%. And it's important you guys understand that, whether it's with that algo or any other algo out there. The more you understand about trading, the more helpful these algos are. But they cannot replace actually trying to understand what's going on there, okay? I just don't want you guys losing money thinking, oh man, you buy an algo and it's going to do all the work for you. All right, guys? All right, you guys have an amazing week. I keep saying that. I hope you guys do. Happy Thanksgiving to everybody, here in the U.S., or if you're American and living outside the U.S. And for everybody else, man, you know what? I hope you guys just really take it easy a bit. Look for the higher confidence entries. And remember, risk management's where it's all at, all right? Take care, guys.